Pennies Going in Raw is a production of iHeartRadio. The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy!
On this episode of Pennies Going in Raw, we discuss the overall market, Bitcoin's bounce, Tesla, and more.
You find out life's this game of pennies.
Oh, you guys know we only have a 40% runner. Hello, 40% is a fucking killing.
We've been compliant for too long. It's time we go to war.
I don't have a Roth.
Hugh knows so much about the market that his brain doesn't have enough room for grammar.
Hey, who told me about IDEX? It's going up a shit ton now.
Rob, 4%, baby. No way. 4 fucking percent.
You asked the exact same question with 2 words different.
It's like, fuck, man, I just got dick whipped for like 20%, and now that f***er's up like 50.
I bet Warren Buffett never did that.
I'm just making this voice memo to call out unusual whales to a fight.
The pennies we need are everywhere around us.
Pennies.
Going in raw.
Featuring Dan, Deity Dips,
And Hugh, honey.
Produced by Vinny.
And Christian.
Let's go, baby.
Welcome back to another episode of Pennies Going in Raw. Today is Wednesday, June 22nd, and we only had one day of trading before we record this. We're recording this on Tuesday, obviously. And we're seeing the bounce. We saw the bounce from an oversold SPY, but over the weekend, I mean, a lot of times you can kind of see that the market's going to be bad based on what Bitcoin will do. But I mean, that Friday, Saturday, Sunday, it was looking real sketch for Bitcoin. You saw it dip down to like 18K. We were talking about this on the previous episode. I think it actually dropped probably as Bitcoin was around those prices, actually. But I mean, we saw it at 19. We said if it went below like that 17.7, it'd be real bad. Thank goodness it bounced off that. And you saw SPY kind of reflected as well, up 10%, not 10% today, but up $10. What were your kind of takes on the overall market today? And was it what you expected, or was this just like a little oversold bounce?
Bro, I got my ass handed to me today.
Oh no.
See, here's the thing is that I hate the gap up days, the gap and go days, because then once the bus stops moving, it's like, okay, like because on a larger time frame, I'm expecting a bigger pullback than fucking $1, when we gap up 10.
Yeah, I'd rather be riding one of those like super train, the train that Vinny took from like DC to New York that whenever we first hung out.
Yeah, exactly.
I'd rather ride one of those down than be on a fucking tram that stops every 3 minutes to pick up and drop off more fucking people.
What do you call it? So I got absolutely fucking smoked today because the thing is that I'm expecting this move like once we break kind of like this uptrend, I'm hitting short and I'm expecting more than like $1 move. So, and then the other thing is I went heavy because I felt good. So I went heavy. So I was
you're playing what? Puts, longer dated, same day put. How exactly? Or I guess it wouldn't be same day because it's Tuesday. But what exactly did you get smoked on? I mean, because you had to be playing something going downward. Because everyone else that was bull gang was making money.
What do you call it? Yeah, but so what I was doing was I was basically shorting. I was shorting one. What time is it? Like right around 11:30ish, maybe a little bit later. We kind of broken down, came back up, and what I wanted to see was actually like a retest of like 376, and then to go short. But we didn't get that, and I kind of jumped it a little bit, but I still felt good about it. But the issue is that even the expiration that I play, which is 2 expirations out, still, they still have some decay. And that's the thing that kind of blows because, even once I got the move kind of down, I just basically got back to even. And
Yeah,
then
because
I
I mean,
felt
you would have, even if it would have tested at least like 370 again, you would have had at least
well.
like 30, 40, right?
So typically, when I'm up 8%, I typically scale out half of my position. And this time, when I was up 8%, I only scaled out 10% of my position. And I even went heavier than I typically do. I was like supersized, which, that again that's not really normal for me. Neither of those instances are normal for me. For me to supersize and for me to and for me not to cover half at 8% gains. So that was pretty frustrating to look back on.
And that just goes
You
to
dumbass.
to everyone listening that was always used to these big gains. He's talking about playing options and scaling out half at 8%. So I mean that's the kind of like risk management that we're in right now. Where if a stock just went up 8%, you'd be like, oh, so when's the move happening? But now if an option's up 8%, you're like, oh, time to scale half, just because the volatility and what the state of the market that we're in right now.
Yeah, exactly. And again, I don't really shoot for anything crazy gains. I had 1,000%. I probably remember inside my 10 this is wild. I'm coming up on almost a decade of trading, and I can only remember maybe 2 to 3 times that I've ever had 1,000% gain on an option. Which I feel like some of the guys I follow, I mean, they're hitting them on the daily.
My AMC ones are up. I think it was either 14 or 17,000%.
Yeah. So I don't really hit those. My average return on equity per option is about 15%. So that's why I typically feel comfortable because I go for the same kind of strikes. I go for the same dates, or not the same dates, but same expiration, same pricing point, stuff like that. And so that's one of those things where that's kind of my thing, and I'm content there. But and I had actually tweeted on Friday when I was down $35. I was like, man, I used to blow up, so happy I'm not doing this shit. And then now I'd come back on Tuesday.
What? No, sorry, I think my internet just flashed for a second, but we're all good. Just continue.
I come back on Tuesday and I do the exact thing that I'm like, go Mitch, you didn't do this, you didn't do this today, that's real progress. And I come back on Tuesday and do the same and do the fucking exact thing that I said that I wasn't gonna do. Also, sorry, Mom, for cursing. She doesn't like.
Yeah, no, I mean, there's so many times where I think traders lose money and then they say, well, they try and find solace in. Well, they're like, well, at least I learned from it, and then they make the same mistake again and again and again. It's like you may have learned from it, but you haven't changed anything.
Exactly, and that's why I was so Friday. I was red, but I had a pretty good week, and honestly, I was just excited about the way that I traded. I haven't really been throwing supersize around since February, but I was just happy about the way that I was trading. And for me to come back on Tuesday, and for me to do the exact thing that I thought that I was growing out of, is kind of upsetting for myself.
You were probably just ready to trade. Long weekend. It was the first ever Juneteenth that was a federal holiday. You weren't used to that. And then Tuesday came around and you blew your load a little early. Happens to the best of us, man.
Yeah, and again, like I said, is that I just like scaling half at a 6 or 7 or 8% gain, because typically that's not that's not
Dude,
a dollar move on SPY. Yeah. So I like that, I was going for 2 weeks green, and then now I have 2 back-to-back red days, and so that's pretty frustrating for myself. And the other thing is that it's just one of those things where it's I don't really care that much about losses like this. It's really more I just kind of get pissed at myself, and I don't like when because I always think of
it feels
the definition of stupid.
Yeah.
Well,
it's you're wasting time. You're fucking. It's you could do better. Why the fuck do I have to be level 1
Well-
through 4 of Zelda when I could just go to level 5.
It's funny because I actually texted one of my buddies at like 9:50 this morning, like when Spy was booming. I was like, oh man, I'm getting excited. I was like, man, this just opens up a nice little door, and so that when I look back on every time that I say something like that, that's typically that's typically when I should walk away for the day because I just get way too excited. And like I said, is that it's not really like the money, like we'll make the money back. It's really more like I felt like I was really growing as a trader, recently and doing a lot better. And so for me to come back and do the exact same fucking thing that I said that I wasn't going to do and say that that I was happy that I wasn't doing, it's so hypocritical and so stupid. And again, like I tweet all that stuff to hold myself accountable, and now I just look like a dumbass. So and I just think of like like the definition of stupid. It's like having or showing a great lack of intelligence or common sense, and that's kind of how I'm feeling right now. So it is what it is. It's only the first trading day of the week, but like I said, is that I did size up typically larger than I do. So if I just get back to even on the week, I'll be pretty happy. But blows.
So are you more upset about the move or like your actual trading or the scaling in too much? Or is it a combination of both? Like if you could go change one thing about today, which is it? And don't say I would make Spy go to 360.
Yeah. No, actually, I'm not that upset about my sizing because that's the way that, that I said that, I was having a really good stretch. And even Friday, even though I got, Friday, even though that I was down on Friday, I was still pretty happy with the way that I was trading. And so I'm really more upset with sorry, I lost my train of thought. I'm really more upset with the fact that I didn't scale out and the quality of the trade probably wasn't the best. Like I should have honestly, like I should have probably scaled, like I typically do 50% at that 80% win and then scaled out, even more once it started to regain that trend line. Like I typically
Well,
would
did you
have.
cut them or are you holding them till the or a little closer to expiration?
I cut like 75%, but I knew that we're inside this range, and I know for a fact that like I feel pretty like I'm okay taking some flyers. So like I said like 85%. I got like maybe a few grand or something, and I'm just gonna hold that over to see because again is that the other annoying thing is like we get like these gap ups and we get these gap downs and it feels like nothing happens during the day. And so I knew that I wanted to take a flyer overnight. And so this is like what I'm considering like my little flyer. So I'm okay with it, but like I said, is that the bigger thing is that, I'm okay with sizing up because again, I have a systematic, scalable strategy that I feel good about. So I'm okay with taking the bigger size. It's really the fact that I, didn't scale any out. When it regained the trend, I didn't say anything, or not that I didn't say anything, but I just kind of let it go. And that's what I'm more pissed about because in hindsight, that's what I would have done.
Yeah. Well, speaking of scaling in and out and of that nature, yeah, I bought me a little Bitcoin on, and by a little I mean a Bitcoin on fucking like Sunday night, I think it was, and yeah, I'm already like all the way scaled out of it because I was like, dude, I'm gonna just fucking trade my way into a whole Bitcoin, and I'm gonna have a free Bitcoin one day off of just my trading prowess of Bitcoin. And yeah, dude. Fuck the crypto haters. I'm gonna be the biggest crypto bull on this bitch one day. So
Wait, so you bought like one
yeah,
full
on Cash App too. Nonetheless,
really?
Dude, I used to think because the Cash Apps, it was like a little delayed, like the pricing, and I was like, holy shit! And it was saying you were like getting it at this price, but you'd get charged later for the difference. And I'd be like, holy shit! I've got a way to make like infinite money. And I was thinking I was getting it. I was like, I'll just wait for it to like go up 1% before it just showed this next 5-minute candle. I was like, dude, I'm such a genius. Anyways, I was paying this extra fee. Uh, but yeah, no, I'm gonna trade my way into a whole Bitcoin, and I'm gonna just have it, and it'll be free. I feel like Doug Bonaparte.
I like it. I like
Thanks,
it.
man.
We're basically a miner. You're a miner, but
Yeah,
you're not.
but instead of a computer doing it, I'm just doing it. All right. Well, moving forward, yeah, but that did look scary for Bitcoin over the weekend. I know even after we recorded, when I think it was at 20 and just broke below 20, and it tapped what, like 18, 17. So
Well, I think it also goes back to what we talked about with Bitcoin, being that that we thought we had talked about on Sunday. We felt like they would bring it back over 20 a few times. Like I really would be shocked if it was just straight from 20 to like 13 or 12 or like 11. Like they still have to give bulls like a little bit of a little bit of a chance, and a little bit of like, they still got to mess, and they got to mess with both sides. They got, like, everybody knows that 20K is obviously a big spot, and especially at 17. So, it's one of those things where they're just not going to bring it down and smoke it. They got to play with both sides. They got to test, they got to gut test the shorts, and they got to gut test the longs, for that next move. And so that's why, like, I think that it's going to be one of those things where I wouldn't be shocked if we saw this, kind of range between, I would even call like 17 to 24 for the next. Honestly, I wouldn't be shocked if through the next month or two, and then when we least expect it, they pull the real move. But we'll see what happens.
all right, so moving forward, a lot more talk about recession, all through like everything. I mean, Michael Burry's tweeting about it. You got fucking Furu's tweeting about how much money you can make after a recession and everything like that. What do you think the sectors that are going to get hurt the most are? I mean, obviously, it's ones where not much spending, or where the spending can be cut out, whether it be like we talked about, the Netflixes, the retail, the extra stuff like that. And which ones do you think will be the safer ones? And like just today, Elon Musk was saying it'll be more likely than not that we enter a recession. And sorry to be the Chicken Little of the podcast worlds, but which sectors do you think can get hurt the most, and which ones do you think can get maybe safer or even bullish?
Yeah. So here's the thing: is that I truly believe. So I do think that I actually am part of like the mainstream of, we're in a recession until they announce that we're in a recession, and then that's typically when I look for bottom. Typically when we look at like we talked about 2008, but 2008 was really 2007 to 2009. We talk about the dot-com bubble. The dot-com bubble was really like 3 or 4 years. So I'm typically inside the camp of, like the biggest move happens, now, and then it, once the recession, kind of shakes out a little bit, that's when we see if we're going to go lower. Because the biggest thing is that, the Fed does control, I am obviously, we talk about the market a lot, on this podcast, but we talk about the market a lot. And so the Fed kind of basically controls the market. But the bigger thing is that those reactionary aftershock moves are what we see really make the difference in the market. So like 2008, it was 2008. It was the first move made by the Fed, and then it was the second move made by the default, made by everybody defaulting. Inside the dot-com bubble, similar situation. We saw the Fed, and then because of the Fed, we had reactionary to where, half of the companies had to close, or, half the companies went bankrupt, stuff like that. So it's typically like cause and effect. And then other times you have it where, the Fed controls the market so much, and, and I don't want to say this wrong, but they kind of do their job where it's like they control the market and they control the economy. And then once they get to a certain spot, it's kind of like that soft landing that you hear everybody talk about. When we talk about soft landing, it's basically, when we talk about soft landing, like we know what we have to do. It's really just going to be like we're going to get punched in the face. It's just going to be, is it going to be a slow motion punch, or are we ripping all the way through the jaw and following through? And so that's really where like the Fed, where the Fed kind of matters. Like how are they going to punch us, basically? And
I think, dude, hear me out, guy. I think I got the metaphor. Okay, you ready? Look, we're bleeding out, but we don't know if we should rip the Band-Aid off real quick, if it's even time to take the Band-Aid off, or if we should just slowly peel it to look behind it and check for. Because, what we're doing right now is slowly peeling it off. It fucking hurts, and we're seeing how everything's reacting. We're like, okay, we're still bleeding out a little bit. Maybe we should, finish ripping it off, or maybe we should keep peeling it off slowly.
Yeah, no, exactly. And so that's kind of like, is that it'll be interesting because, again, like I've never traded through anything like this. Obviously Dan and I lived through the .com bubble, and 2008, but I didn't.
If you consider, you didn't live through the .com bubble, you were born in the .com.
I was alive for it. Obviously I didn't see
it was probably the same day that it ended.
Yeah, pretty close. Honestly,
I had to sacrifice my upper middle class livelihood for the .com bubble. I hope you know.
Oh please! I see Miss Dippity's.
She's fine now, dude. She's good now.
What do you call it? But yeah. So okay, fine. We were alive for both of them. Even 2008. I really didn't know. I had seen some of the hardships. However, it really wasn't. It's really not the same. I'd seen some of the hardships, but it's really not the same, through what we're seeing right now. So for me personally, I feel like I'm learning a lot. I'll be interested to see, because again, there is a world where enough unemployment rises high enough, and based on our current consumer savings index and the amount of debt that we have out, that there is a world where a good amount of the population does go into default again. It's different than 2008. However, again, default is default. And
I was just reading an article today about how I don't know if this is just realestateagentcentral.com, but saying how it can't be as nearly as bad as it was in 2008 solely because of all the regulations they made after it.
Yeah, no, that's true. But I think that has to go more about the loan process. So right now, hypothetically, you can right now, based on, because again, let's take what we talked about last week about the 250K, the 250 people making 250K, a third of them are living paycheck to paycheck. Should they be living paycheck to paycheck? God, no. However, we're spending so much.
They should be living in a penthouse.
Yeah. And so hypothetically, right now, should we be, should the consumer index or, consumer savings rate be 4%? God, no. Hypothetically, on paper, should you be able to handle the mortgage? Yes. However, with us not saving anything and spending a fuck ton, and then, again, if unemployment rises because of cause and effect due to, the Fed tightening, that's when we get into these struggles. And so different, like 2008, we could think about, what was it, margin call or whatever. It had strippers' dogs who had houses.
The Big Short, dude. Get your fucking
The Big Short. That's all it was. They're all the same. They're all the same.
Oh my god, dude. We'll have that conversation another day. The Big Short.
No, listen. I like the movie.
Above the rest. Margin.
What do you call it? But I like the margin.
I didn't like the ending. I was like, come on, give me a little more fucking excitement. I felt unfulfilled. That's all.
Okay. And but yeah, so pretty much what I'm saying is that 2008, strippers
dogs had houses in their name. Yeah, whenever they're going to check in Texas or Arizona or wherever, and they're like, exactly. Oh, that's my dog's name. It did something.
Now it's okay, we've had a pause on student loan payments. We've had everybody was giving a few $1,000s And so hypothetically, we should be able to take care of our business. But, when shit hits the fan and we're not saving anything, that's when we get into a struggle. And again, is that for anyone who doesn't really understand like the Fed's job, the Fed is supposed to tighten or is supposed to, slow down the economy when the economy is booming. The economy is not booming right now. We just don't have a choice because inflation is so high.
Yeah, no, it's definitely a pickle for that situation. Another thing, yeah, I don't know what
Definitely a pickle over there. Wouldn't want to be the Fed.
Yeah, no, thank God I'm a podcaster. But as we go on, you think about one thing that was up today a lot, aside from just the market, was Tesla up 10% on Elon saying that they're going to lay off 10% of their salary workers over the next 3 months. How exactly why was that such a bullish thing? I mean, usually you see people being laid off. It doesn't exactly seem like the best.
Yeah, no, it doesn't. And that's exactly what we're talking about. And I mean, it was Coinbase last weekend. I think it was Adobe. Maybe I'm getting that one confused. But we had Coinbase let off 18%. Again, is that and this is a perfect example because I just talk about the consumer spending too much. Companies too. Coinbase is laying off 18% of their workforce. However, their CEO and founder has a $180 million home. They also have sponsored like 2 or 3 pro teams. And don't they have like a stadium named after them?
You're talking about
Coinbase. Don't they have a stadium named after them or something?
I know there's crypto.com. Coinbase. They probably have
you're
like
right,
a fucking bowl
crypto.com.
game.
But I mean, we're talking about like like we're talking about like SoFi Stadium, Crypto.com Arena.
I mean, dude,
like,
fucking Wish was on the Lakers jerseys a year ago.
Yeah, exactly. And so it's not just the consumer; it's these companies too. And so now you're seeing again, Fed tightening. What are they forced to do? They're forced to unemployment to lay off some people. Unemployment rises. And again, those people that are laid off. Now remember, those people that are laid off, the average American only saves $4, or let's even round it up to $5 for every 100. How far is that going to get them with no paycheck coming in? They're going to be like Allen Iverson after he stopped getting NBA checks. Like that's what we're seeing. And so it's so different from 2008 to where it's like, people shouldn't have these loans. No, the credit card, I will say, if you sign a credit card and you don't pay off your credit card and it has 18 to 30% interest rate, I will literally come to your home. And I will come to your home and we can sit down and put a budget in because that is ridiculous. Or a car loan for 18, 20%, go get yourself a 1993 Honda Civic. That's what you should be doing. It's ridiculous to me that you'll spend a year's salary on a car and you'll end up, by the time that you're done paying off the car, you'll have bought 2 of those cars. That's ridiculous to me. So that's the issue that we're seeing right now. And so it'll be really interesting to see if the Fed has to continue to raise over the next, I'll say 6 to 12 months, because in my opinion, that's kind of the buffer zone. If we start getting into next year, we start getting into 2023 and we're still raising rates and we're starting to see unemployment climb, because again, unemployment is going to lag, the Fed tightening. That's the way things work. Then that's when we're going to start to see bigger issues.
Yeah. Well, as we go on and talk about things a little happier than everyone, losing their jobs and things. Can you think of any other bubbles that you see going on right now that you think might be in danger? I know of one I can think of that I wish I knew how to short it. Just haven't figured it out yet, but I'm on its ass.
What were you going to say?
Okay. You ready?
Yeah.
I think the influencer bubble, with like all of these influencers getting paid tons of money, because I mean, you got to think who pays them. It's the sponsors, and because whenever it started, it was like the year 2000, and it's a blogger talking about what it's like to own a Yorkie. And whenever a sponsor's like, hey, I own this dog food company, if you recommend it, the people reading it would trust that person because, I mean, why wouldn't they? They're already watching their stuff. They trust that person for Yorkies. People don't exactly trust the influencers anymore, for one. I mean, two, you look at things like fucking Steve will do it, David Dobrik and shit, just handing out millions of dollars per video on a YouTube video that has 4 million views. And how is that sustainable? And at what point do these companies just be like, fuck, dude, we're not making nearly as much? I mean, the one you're saying right now all over the place that they're doing is you know how they're all, even Drake playing like the roulette and you know, online gambling. Could you imagine how much it takes for a Drake Instagram post? My God.
Yeah. No, exactly. And that's a great point. And the other thing right now is that it feels like the influencer wave, everybody and their mother's an influencer right now. I mean, Dan and I are influencers. I didn't know how to use social media to
write off, if you can write off your giveaways, I mean, that's the only way. Like Steve will do it's giving away fucking Ferraris and shit, I imagine, is just writing it all off. Like, at what point is the IRS like, we gotta tighten this shit up? You can't just give away everything and write it all off just because you make a dickload of money.
Yeah. No, I mean, you're right. The influencer vibe is crazy. I think the other thing is that with the influencers is that it comes down to everybody had so much money, to spend recently because again is that you could borrow it for nothing. Like it was like, hey, listen, I'll borrow, $20 million at 1%, whatever, I'll, and then it's like, that 1% is nothing because again, is that we were spending so much money as an economy that, for the companies, it was worth it. But again, is that it comes down to when people stop spending so much money, what's that first thing? It's going to be those discretionary funds. And I saw a tweet today. It was, and I'll read it. And so obviously recording this on a Tuesday. So let me find the guy's Twitter. So his Twitter is Will Mandis. Okay, he's got like 30,000 followers. All right, he's the CEO or something, whatever. And he tweeted today that and so this was last night, so Monday night. Buddy who manages a luxury hotel in New York City says this week is the highest percent of denied credit cards he's ever seen. And I know I got to read the entire tweet. However, he said NFTs forever, and obviously there's the NFT, the NFT convention in New York City this weekend. This week, and so it's again one of those things where like money stops coming in like it was, and you're gonna see it across the board. And again, like influencers won't get paid. I mean, Dan and I we've been offered some pretty crazy amounts of money to tweet stuff out.
All those tweets about PETA that I tweeted last year. Any tweet about a stock that ended up being wrong, I just want you guys to know I banked off. No, I'm just playing.
Yeah, what do you call it? We had what do you call it? I had one sunglass company offer
bullshit like that, dude. That doesn't bother me, dude. I was fucking rocking a wig if it don't.
No, listen.
But
listen,
it was the OTC stocks that were pissing me off. I'm like, dude, have you not seen any of my tweets?
Bro.
My followers would know immediately. They'd be like, oh, okay, Dan just dug in and did a lot of scientific research on these antibiotic seeds.
Bro, I like the companies who like they're public companies and they'll be like, hey, like we really wanted to send you a box of our stuff. And I'm like, all right, that's fine. However, like just so that like I'm not gonna tweet this out. Maybe someone wouldn't even answer, and it's like, all right, I get it. However, don't just be sliding my DMs like expecting that, I'm just gonna be like, oh wow, like, this is such a great product, and I'll look up like the market cap. It's like a $50 million like company, and they're losing like a fuck ton of revenue, and so like or like you said, like the OTC companies, like, hey, like I'm part of like the marketing team at this, and I look at like this company. I'm like, brother, like you see that I hate OTCs. See that I literally don't trade OTCs.
Yeah, it's a mix too. Because you see like now these influencers think they deserve all this money. And back then, like 10 years ago, they'd be like, oh, I'm getting a free just the free clothes is worth the free advertisement. Now you're like,
Yeah.
I need the free clothes and the 50K. And the company's like, fuck it, I'll do it. Charlie D'Amelio, you're the best. So,
Yeah.
you know, it'll be interesting to see where they go. And I heard you mention NFTs. I watched like a 1 hour documentary this weekend on how the Bored Ape Yacht Club is, you know, the Bored Apes, like the most expensive NFTs, about how it's all filled with just Nazi and white power symbolism. And there were a lot that I was like, this is pretty much a reach. But like he said in the beginning of the video, I was like, but fuck, if you got an hour of reaches, I mean, there's so many of them. I was like, fuck, dude. I'm gonna post that. I'm gonna show it to you, and if anyone else wants to watch it, I don't want to just post it and be like, "Yep, dude." So Bored Apes are a bunch of Nazis. So I don't want people to misconstrue what I say. Just thought it was an interesting video. All right, guys. Well, we hope you have a great rest of your week, and we will see you all Sunday.
Pennies Going in Raw is a production of iHeartRadio. For more podcasts from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.